However, when the CPI came out, the market didn't seem to really care much. It wasn't until Friday when the PPI came out and retail sales blew it away. The biggest issue with anyone watching the market is confirmation bias. That they think the market's going to do something, so they look for all the reasons why it should do that. This is the annualized numbers for the last couple of weeks of September.
Oh, ugly.
Ugly, ugly, ugly.
Alrighty, folks, let's make an exciting announcement. So probably by now you've heard on this channel, we are going to host our celebration, our party on February 17th, February 18th in Las Vegas. You're going to get the opportunity to hear from at least 11 weekly guests and some surprise guests and have a concert and have a party and all of that stuff. And Mr. Dan Bird has agreed to fly out from Florida to have one of those sessions. So Dan, thank you very much for saying yes. That was very nice of you.
Yeah, absolutely. It'll be fun. Be fun. Not only fun, but it'll be jam-packed with information.
Yeah, and it's going to be real estate. We're going to have stocks. We're just basically how the channel was built. And again, I have some secret guests that I'm lining up as well. I'm looking to exceed expectations, which everything I do, I try to exceed expectations. So people are going to get to ask you a bunch of questions. The goal of every session is the speaker will get 10 or 15 minutes, maybe 20 minutes to share what they would like. He and I, or she and I, will agree. And then we will have microphones in the audience. So the audience will get to drive the next 40, 45 minutes of topics. So a very, very different event. No selling, all thank you, all just what one rental at a time is. So I look forward to it.
Yeah, you told me I'd have an hour, but 45 minutes would be Q&A.
I did.
So I asked for 3 hours.
Yeah, exactly. Yeah. Michael, if you're giving me 15 minutes, that's only one slide. I'm like, exactly. Well, I digress. I'm so excited about the event. It is about 150 days away. We've already sold all the VIP tickets, so I had to open up a couple more. But yeah, it's going to be a blowout. But let's talk about last week. Let's talk about next week. We got CPI last week. We got the Fed decision next week. Wild, wild rides. What's going on?
Yeah, it was pretty interesting last week. So what'd you think of the CPI?
Higher than I expected. Much higher. I was wrong.
3.7. Yeah.
I was wrong. Housing
by the way, before I jump into it, for anybody that's interested in getting my newsletter, which is free, just go to breakpointtrading.net and register there. I will mention, because I've had this question a number of times, you register your email, but that's only step one. Step two is you actually have to sign up for a subscription.
Yeah.
But the newsletter's free. So it will say you need to, get a pricing plan. But if you pick the first one, it's free. So
$0. You have a $0.
$0 doesn't ask for a credit card or anything else. It just, gets you in so you can get the newsletter every week.
Yeah, it adds a person to the list, so it automates the process. Totally.
And I am going to start sending emails, reminders out to everybody because everyone's been asking for that. So I'm in the process of reducing my mailing list. And in my latest one that I sent this week, the email said, if you want to stay on this and get a reminder, just reply to this and say yes.
There you go. Okay.
So I've got a bunch of people that have already done that. So anyone, I'm going to do that for the next 4 weeks. And after that, anyone that hasn't replied, if they want to stay on or get the newsletter, I'm just going to take them off the list. So
perfect. I like it.
All right. So let's take a look at, this is my website here. And all the way down at the bottom, these are the pricing plans. So you can see the free newsletter. Just click there and sign up. There's no credit card. It's all free. It'll just allow you to log in and get the newsletter. And the newsletter is always right here. So if you put this on your favorites bar, it's basically 2 clicks and you've got it. So when I click here, maybe 3 clicks. Here's the PDF. So let's look at, right now, IBD is still saying uptrend under pressure. Keep exposure 20 to 40%. Here's last week's numbers.
Yeah.
3.7 on CPI.
Much higher than I
Forecast was
expected.
3.6. Previous was actually 3.3.
Hmm.
Still showing 3.2, but it was actually 3.3.
And before that, it was 3.0. So we've got a
Yeah,
we've
before
got a
that it was
defined
3.0.
uptrend. Yeah, we've got an
Yeah,
uptrend.
so significant increase. However, when the CPI came out, the market didn't seem to really care much.
Hmm.
It wasn't until Friday when the PPI came out
Yeah.
and retail numbers, which is down
Retail
here.
sales. Yeah, retail sales.
Retail sales blew it away. So you see PPI went up significantly as well, and retail sales went up. So inflation's going up, but people are still buying stuff.
Hmm.
Not necessarily what the Fed wants to see. So
Yeah, 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 yeah.
what are your thoughts about next week, the Fed meeting?
Oh, they're not raising. They're not raising. It'll be a hawkish pause.
Yeah, that's a good way to put it.
Yeah, it'll be a
They'll
hawkish
talk a good
pause.
game.
Yeah, I
But
still think the Fed's done. I think the underlying structure of inflation is going bad. Rents rolled over. It only gets better from here. Oil or energy is concerning. It does ripple through. Um, but yeah, I haven't changed my opinion. The Fed's
that's
done.
why I put this. That's why I put this cartoon in my newsletter.
Yeah, boing.
But yeah, oil's going up. But interestingly, uh, gasoline didn't go up quite as much.
Mm,
So one of the pages I stay on quite a bit is the charts page, and this has the Fed rate hikes right here. So I mean, the market has just continued higher ever since the October bottom,
right.
and it really hasn't come back yet to test this trend line, but it's starting to.
Yeah.
And we're in the period of the season right now that it's the next couple of weeks, next 2 weeks are going to probably be a corrective market. But look at gasoline down here. Oil and the commodity index absolutely have been screaming higher. But
Yeah.
gasoline hasn't really followed oil. It's going up a little bit. So maybe there's a delay factor in there.
Maybe. Yeah, maybe. Yeah, time lag. Yeah.
So we'll see. But it's not rolling over yet. It's still going up. So that won't be good for the market
No.
because oil's in everything. So
Yeah. Well, what do
so
you
we'll
think? Do you think
see.
the Fed's gonna have the balls to give us a hike next week?
I think the Fed will pause. I think just like you said, it will be a hawkish pause. They'll pause,
Okay.
but they'll continue to talk that they're ready to raise at any point if they see inflation continuing to go higher. I think what they'll say is we want to see what the effects of all of these hikes were.
Hmm.
The last one was a quarter point.
Yeah. I think
So
there's a lot of structural things going on. I think student loan restarting October 1st. It's just, I don't think the economy is nearly as strong as maybe some of these numbers, retail sales made it look.
well, I mean, the Fed has been trying to slow the economy down, right? But
Yeah.
the economy just seems to want to chug higher.
Yeah.
And I'm still hearing from a lot of prognosticators that we're going to hit all-time highs, and I still think we will as well. The end of the year,
Yeah, it's funny.
and
I got to tell you, ever since you brought this to us, and you've been there all year, like you said, there's a growing number of folks that are kind of coming out. Tom Lee being the most obvious, but there are many others. But I will tell you that there's a growing drumbeat that we're just going to roll over and fall 20, 30, 40%. And I don't
yeah,
know if that's just negative news
but
nonsense.
based on what? I mean,
Oh,
just that's to me, it's based on a feeling. I think it's gone up too much. It feels
yeah,
like it's gone up too much. So I
yeah,
think it
no,
feels like it should roll over.
yeah, no. I guess what I was referring to is the economy is much weaker, and we're about to see some really nasty numbers, and we'll have a government shutdown, and student loans, and unemployment going up, and. I think
Yeah.
there's some interesting numbers coming.
Yes. But those kinds of things are always there.
Of course, of
That
course.
doesn't mean that they will.
No, yeah, absolutely.
Here's my, the one thing I always go back to is the secular bull market.
Hmm.
And we're still, closer to the high of the secular bull market than we are even to this trend
Yep.
line right here.
Yep.
So before we are going to have a big, huge crash. So right now, this trend line is at roughly 3,800,
Sure.
I'd say,
Sure. Sure.
about 3,800. In order for us to get down to 3,800, we're at 45 right now.
Yeah.
That's a pretty
15%.
long way to go.
Yeah. Okay.
So if anyone is saying, yeah, sure, we could get down here, we could get down to 42,
Mm.
no question
Okay.
about that. And some people that might feel like a crash to a lot of people,
Mm.
but we've been a lot lower than that.
Yeah.
So even if we came down to 42, we would still be um, respecting this trend line right here,
Hmm.
and we'd still be a long way from this secular bull market ending.
Oh yeah. I like
So
it.
I mean, we've
I have faith. I was just sharing the other side. I like it.
sure, yeah. And you have to look at both sides. You have to look at everything. You can't have confirmation bias. That's the biggest issue with anyone watching the market is confirmation bias. That they think the market's going to do something, so they look for all the reasons why it should do that.
Mhm.
We're going to talk about that a little bit in the next session from an email that somebody sent me about utilities look like they're starting to come up and that might be signaling a crash.
Mhm.
We'll talk about that in the next session. But all of those issues are always there in any kind of market. If we
Mhm.
look at the S&P right now, you can see that we have just been going sideways.
Yeah.
We had a huge down day on Friday, though.
Mm.
When all of these moving averages were basically just running along right next side by side with each other. The 8-day, the 21-day, and the 50-day all collected there together. And then Friday, we crashed through it. Now, having said that, Friday was triple witching.
Ah, okay.
So there's the volume. There's triple witching for this quarter, there's last quarter, and there's the first quarter. All right, so that kind of volume happens every time the end of the quarter on options expiration day.
Okay.
But one thing that does concern me about this chart is this accumulation distribution line.
Oh yeah, look at that.
So ever since this peak right here, looks like big traders are distributing, they're selling.
Mm.
But again, this is the time of year that this usually happens.
Right.
So I think we are going to have a very painful next couple of weeks
Okay.
through the end of September and maybe into the beginning of October. And then we're going to start the rally into the end of the year.
Ah, okay.
So um, what that means is this is the time. It's my newsletter again. I think I mentioned that in here. So here's this is from Tom Bowley, Earnings Beats. He actually takes these numbers from Stock Traders Almanac, who does a really good historical view going back 50 or 75 years. This is the annualized numbers for the last couple of weeks of September.
Oh, oh, ugly.
Ugly, ugly, ugly. Annualized return for the 7 consecutive day period is minus 42%, roughly.
Yeesh.
Now,
Get out.
keep in mind that's annualized.
Yeah, 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 yeah.
So that's going to make it look worse than it might really be, but it's still down and it's still down a lot.
Mhm.
And then he says, if you think things get better with the NASDAQ and the Russell, think again.
Oh my goodness.
49% there, 81% on the Russell, which is the small caps.
Mm.
7 times, it's risen 7 times and fallen 16 times this century since 2000.
Wow.
So historically, we are in the worst possible period for the market.
Okay.
Historically, this is when you should have distribution. You should be seeing people getting out because, most everybody knows this about September.
Yeah.
But One of my favorite quotes from Dr. David Paul. I think he got it
Yeah.
from somebody else, but when it's time to buy, you won't want to.
Yep.
So if the market continues lower, which I think it probably will, end of September into October, then might be a good time to hold your nose and buy.
End of September into October.
Into October. Yeah. Usually the end of your rally doesn't happen until about the third week of October.
Okay. All right. Well, let's see. Let's see what kind of pain and washouts and leverage. I wonder how much leverage is in the system.
Yeah, I don't know. That's a good question.
Yeah, because
This
you
is
can get
something that I've
these
been working
margins.
on. It's actually on my website now. But I thought I would put together just a view of all of the different components of the market.
Mm-hmm.
So these are the indexes. Make this a little bigger. These are the indexes, the sectors, industry groups like semiconductors, software, cloud, etc. Intermarket relationships, so discretionary versus staples, growth versus value, etc. Commodities, metals, and then currencies and treasuries. And then I ranked these based on some technical aspects, which I'll show you in a second here. And then I gave them quantitative values. So short term, medium term, and long term bias. Short term is using a momentum indicator.
Okay.
And if most of these, there's one for each category, but there's one for the whole list as well. So if it's under 40%, it'll be red. If it's between 40 and 60, it'll be yellow. And if it's over 60%, it'll be green. So you can see from a long-term basis, it's 75% green. So long-term, we're still looking pretty good. Short-term doesn't look good at all. I mean, medium-term, sorry. Medium-term doesn't look good at all. It's red. And I'd say, in the medium-term last few weeks, the market hasn't really felt too good. Short-term is in the middle. It's yellow right now, but it's right on the cusp of turning red also. Now, I will be updating these twice a week, Wednesday and Friday.
Okay.
And I created a whole page for it right here.
Nice.
So this explains the whole thing. And then if you want to look at any one of these, so let's just out of curiosity, because we're going to talk about utilities in the next one. Let's just look at utilities right here. So here's the utilities chart. So this one up here is the short-term indicator, this momentum. So short-term, it's green, so it's bullish. Medium-term, the blue line, the 21 is below the 50, so it's bearish. And long-term, the 50 is below the 200.
Oh, yeah.
So it's bearish. So that gives it bull, bear, bear. Follow?
Yep.
So that's how I do that. So if you look at utilities right here, bull, bear, bear.
Got it.
And then as each of these changes, then it will automatically update. And you can actually download the spreadsheet if you want to actually see how it changes up in the spreadsheet itself.
You get to geek out. I like it.
So, if I change this to a bull, you can see this goes up to 42% up here.
Yep. I got you.
So the ones that change the most are the short-term ones. The medium and the long-term don't change that much.
Sure.
So really, it doesn't take much work for me to go in twice a week and just check the short-term and change those. But as we watch it over time, if the market does start to rally the end of the year, and especially if this long-term stays bullish, then you should start to see the short-term and the medium-term start to turn bullish too.
Okay.
Or at least the medium-term turn yellow. And then maybe the short-term might turn bullish before the medium-term.
Right.
So it's just a way to gauge the market.
That's interesting.
See what it's doing. And on any one of these, you can click on it and look at the chart. So that's small caps, bearish all across the board.
So so I think the Fed meeting's Wednesday, usually happens on a Wednesday. How do you think the market is set up, right? So we had an ugly Friday, triple witching.
I think, so we'll talk about Max Payne in the next session as well.
Okay.
But yeah, we
All
had
right.
an ugly Friday. I think that might carry over into next week. I
Okay.
think it actually might even continue for the next 2 weeks into the end of September.
Okay.
I think that the Fed meeting, as long as they don't raise,
Mm-hmm.
and even if they raised, I'm not sure the market would do anything differently. But I think pretty much everyone is expecting them to hold.
Mm-hmm.
So I don't think I think it's going to be a non-event. I think the other things around the market are going to affect it more than the Fed meeting.
Okay.
Um,
Are
so
you watching oil at all? I mean, you concerned oil might go to
yeah,
$100?
yeah, oh yeah, it easily could. I've got oil down here in commodities. You can look at the oil index right here. It's just screaming higher. This is bull,
Yeah.
bull, bull.
Yeah.
Short-term bull, medium-term bull, long-term bull.
Yeah.
It's continuing higher, and it doesn't look like it's abating. I think it will go higher. Here's West Texas crude. Same thing. Short term, medium term, long term, they're all bullish.
Mm. Okay.
So
90
yeah,
bucks.
I think it could very well go to 100. And that I think is going to affect the market in the next few weeks. In fact, that probably will affect it more than anything else.
Yeah, the thing about oil, in my opinion, is it's a shadow Fed rate rise, Fed rate increase.
Yeah,
The Fed can't, there's nothing the Fed could do about the price of oil. They
right.
can't produce, they can't, none of that stuff. But you know what? If oil goes up, it restricts disposable income. And
Yes.
that's like a Fed rate increase. So
Well,
higher oil goes, the
and
Powell likes it.
it also increases the price of other things too.
Yeah, it ripples through. Yeah.
So it's an inflationary situation too. So
Yep.
the Fed, I don't think can look at just CPI. They have to look at oil too.
Yeah. Okay. All right.
By the
Any
way, one last
closing
thing, and
thoughts? Sure.
then we'll go to the next session. But I also added in here under the sectors. So I had the sector week, daily, and weekly charts, and I had the sector compared to the S&P. I
Mhm.
added in the top three stocks in each
Wow. Look
sector
at you.
as well. And then I cross-reference those to the top 10 lists that I have down that I do down here. Top 10 in VectorVast, top 10 for earnings beats, and top 10 in IBD.
Mm-hmm.
So if you see it in yellow or orange, that means they're common across these three. But if you see it in red, that means it's the top 10 is common with the sectors over here.
Ah, I gotcha.
So
Okay.
it's interesting looking at it that way because it shows me that there are very few that are common across the aggressive sectors.
Mm-hmm.
There's one that's common in healthcare, but the breadth sectors, financials, energy in particular, and industrials. And by the way, industrials love November and December.
Okay.
I wouldn't be surprised to see the rotation out of technology
Yep.
in the next few weeks and start rotating into utilities, industrials, materials, some of these other breadth sectors.
All
Utilities is
right.
actually a defensive sector,
Yeah.
but each of these are clickable as well. So if you want to look at the chart for one of these, you just click on it.
Very cool. All right.
Brings up
Well,
the chart.
show the website one more time, and we will get on to Max Payne and are the utility signaling Payne ahead.
Yep. So just go to breakpointtrading.net and you register your email, but make sure you go and sign up for the $0 free subscription or the free plan. It will say you need to pick a pricing plan. Don't be misled by that pricing, that word pricing. It's actually free. So just go pick
Yeah.
the free one.
Yeah.
And then you can get
Zero is a price.
yes, you can get the
And
newsletter that way. And if you want to sign up for the whole thing, like the things I've been showing you,
yeah.
it's really more for people that are actually in the market rather than just curious and following the market. But
No
there's
doubt.
a ton of value out there if you do want to do that.
Absolutely. All right, buddy. Thank you so much.
Okay.